Well, let's now bring you more on the latest decision by the Monetary Policy Committee. We're joined on the news at 10 by the Managing Director and Chief Executive of Financial Derivatives Company, Mr. Bismarck Rewane. Good evening, Mr. Rewane. Thank you for joining us on the news at 10. It's yet another big MPC day, and we're left trying to make sense of the latest figures. Some analysts had predicted a hike, but clearly not this huge. So please explain to us, why now and why this magnitude?
Good evening, Kayode, and good evening, Nigerians. What has happened is that the policy-making body for monetary policy in Nigeria is the Monetary Policy Committee of the Central Bank of Nigeria. And the Central Bank of Nigeria decided today to hike rates by 150 basis points. Cumulatively, in the last 6 months, it has increased interest rate by 400 basis points. That is 4%. That is more than the cumulative interest rate hikes in the last 10 years. Now, why is it doing that? And why this magnitude? It's doing that because one of the tools for monetary policy to contain and moderate inflation is the interest rate. However, it depends on what kind of inflation you're talking about. Is it demand pull inflation? Is it cost push inflation? Or is it a combination of all of these factors, including what you call global supply shocks? So basically, this is what has happened, and the magnitude is almost consistent with what has happened with the rest of Africa. You can see our caption of our slides is going with the flow. Nigeria is one of the 4 countries that have increased interest rates by more than 300 basis points in the last 3 months. What has been Ghana, South Africa, and some other nations. But let us go back and look at other countries in the world. The United States, for example, which had kept interest rates very low over the last 20 years, has increased interest rates in the last 12 months by more than 250 basis points, 3 times at 75 basis points, and 1 time at 50 basis points. So when you look at that, look at what has happened in the UK. So the effect of this is that you find interest rates beginning to increase, and when interest rates increase, the currency of that country actually strengthens, especially the reserve currency like the United States. So the question is, why now? If not now, when? Why this high? Because we delayed. We should have done this a few times ago in a moderate fashion, but now we have to do it. And the only problem at times is that an overdose is not a cure for a previous underdose. You have to go through the entire therapy to get the desired effect.
Well, clearly, the elephant in the room will be how this will affect the inflation. And I mean, it looks like this is a major reason for the hike. But from where you sit, do you think this is enough to tame inflation and not just mere copying from the script of other countries?
Yes, again, copycat syndrome in policy doesn't work because every country has its own peculiarities. And inflation today in Nigeria is a combination of so many factors. But the most causative factor, the most potent cause of inflation today, when we analyze it with our team, that 73% of almost all the inflation that arises in Nigeria today is because of an exchange rate pass-through. There's imported inflation, there's weakness of the currency, and there's rationing of the currency. So if there's a 100% increase in prices or 100 naira increase in price, 74 naira of that comes as a result of exchange rate. The other big causative factor is the price of diesel. Diesel causes about 11% of this, and then before you get money supply. So if you don't address the exchange rate system, which you are both structural and operational processes of determining the exchange rate, you will end up using the wrong therapy for the wrong ailment. And the worst thing to do is to have misdiagnosis in any ailment, as you know.
So there are millions of Nigerians who received this latest hike today, and they're wondering, how does this impact on my life, my lifestyle? So help us understand this. How does this impact on Nigerians, especially on the common man, as they say?
Okay, let me first of all look at the theoretical framework. If you increase the nominal rate, which is the policy rate now today, it doesn't do anything because that nominal rate it anchors expectations. But if you do not increase the general structure of interest rates in the country, in other words, the treasury rates, the borrowing rates, the lending rates, then you will not reduce the appetite of people to consume, and the consumption which goes towards imported goods will also be there. But if you deal with the exchange rate system that you have, as a matter of fact, the most potent factor of sucking out liquidity out of the system in this country today is to adjust the exchange rate, because the economy is more exchange rate sensitive than interest rate sensitive. Now, in other words, if you are to adjust the exchange rate to make it to converge a little bit more, right? An adjustment of the exchange rate is used to mop up liquidity and increase the amount of foreign exchange going into the market. But to do that, you need to deal with oil theft, you need to deal with so many other factors. So it's not as easy as that. But to the extent that that Nigeria as a country, the circumstances are under our control are getting fewer and fewer and less. Therefore, we are virtually policy takers rather than policy makers. And so now, how does it affect the ordinary man? The ordinary man, primarily,
right,
because official inflation is 20.54, but actually, the effective rate of inflation in urban Nigeria is probably higher than that. It just means that because interest rates have increased, you are more likely to save money rather than consume money.
Right.
You are more likely to put your money in the bank and get interest rather than buy the Ashoebi. You are more likely to do that than spend consumption, what they call ostentatious consumption.
Well,
and that actually reduces the demand and the effect of this on other people.
Right. Clearly interesting days ahead as we approach Christmas and political activities. But I would like to thank you so much for the insights. Mr. Bismarck Rewane is the CEO of Financial Derivatives Company Limited. Thank you for your time.
Thank you for having me.
News at 10.